Hello traders, it is Monday the 17th of June 2019. It's 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market, the indices are mixed, slight edge to the risk on side. The Nasdaq's up 16.75 points. As the leader this morning. But overall, the sentiment is mixed. I want to remind everyone early on here that it is quad witching Friday. This Friday, it's expiration week. It's a good time to put an extra emphasis on capital preservation, on making sure that we're not tying up too much capital in any given trade, as the market will position itself in ways that have to do with a roll and expiration more than speculation or a directional move. We've been consolidating for some time in the U.S. indices, and we may see some moves, but overall, the volume is tricky this week. The volume delta is likely to be off, and overall, daily volume is likely to be off as well, off the norm. Generally, daily volume would be higher as everyone is forced to move into the next contract unless they want to be delivered on the June. So that's what we've got. Quad witching Friday. Means that futures, single stock futures, options on equities and options on futures all expire on that day at different times. The futures expire before at the open at 8:30 Central, 9:30 Eastern, and some of the options expire at the end of the day. So that's what we've got. So throughout the session on Friday and through the end of session, we're likely to see some movement that may not make sense. Also, there are calendar spreads in the book which take priority over your FIFO or first in, first out order, depending on when the calendar is put in. Calendar spreads are agnostic to price, so it can come in front of you. It can step in front of you and get filled before you because the spread is at the right price at the current market. So just some tricky stuff there. Overall, just to understand that this is a good week to be cautious and to be defensive rather than aggressive. So that's that. The leader this morning, the euro's up quite a bit. It looks like about 0.29%. Again, the Nasdaq follows the Russell after that. The cables is higher. And crude is off 23 cents, trading at 52.28 on the July, or 0.44%. The DAX is also off, even though the Euro stocks are unchanged to up 1 point. Mixed bag, as I said, as we start this expiration week. As far as what's on the calendar for the week, because it's Monday, I always review what's coming out, what is a high tier. What are the high tier releases coming out this week? And what we have is there isn't much today. We do have the German ZOO Economic Sentiment Index tomorrow, as well as balance of trade out of Japan. The ZOO is German. You can always pull up a calendar and see what these are. Inflation rate out of Great Britain on Wednesday. And Fed interest rate decision on Wednesday as well, along with the projections. Thursday we have the MPC meeting minutes out of Great Britain and the BOE interest rate decision. Consumer confidence as well out of the Eurozone on Thursday and Friday. We have German market PMI flash. Those are considered high tier or market moving releases. For today, we get the NAHB Housing Market Index. It's a low tier release, expecting 67, the prior 66. That's at 10 o'clock Eastern. ECB President Draghi speaks at 1 p.m. Eastern. Pay attention to that if you're in Eurex or Euro related products. And the ECB forum on central banking is taking place today, and there may be some releases from that as well. So those are the scheduled items that may interrupt the auction for us today that we need to be aware of. Let's move on to our review segment. Here's what was expected on Friday. The primary scenario, we were opening on Friday in the middle of the range on a pretty tough overnight read on the Friday session. And the expectation is it's likely to try to push up to 97, fall out of the range, and then pop back in at the end of the day. That's the primary scenario. That's this green scenario. Now, you don't have to have scenarios to trade successfully. This is just a way of planning and sticking with the trade once it is on. The secondary scenario is a drift down that pushes the high, and breaks through to 2904, and before it turns over. Here's what actually happened. A pretty, dare I say, lame trade on Friday. Very, very tight. We spent just a huge portion of the session just to break the IB. Now remember, the IB was put in at 9:30. Somewhere in here. The IB was put in somewhere in here, and it took it an additional 4.5 hours to break out of the initial bounce, which by all measures statistically was a pretty standard initial bounce. It wasn't extra wide, or there wasn't a run at the open that would cause a very wide initial bounce. And we broke higher after breaking below the prior day's low. The prior day's low is the green line right there. So what we have here is a combination of scenario 1 and scenario 2. Remember, scenario 1 was looking for a drift up into the prior point of control, and then a push down into below the prior range. And scenario 2 was looking for a push up into 2904.50 and then a fall back in. Did not find Friday to be an interesting trade. Did not see many opportunities. And, with the roll taking place and now having September exceed June's volume, the roll is in full motion. There is a really interesting chart that you can track the roll with, and it's for equities. It's for equities, and it's on the CME website. You can track the S&P roll and see how it's progressing, and you can tell when the volume actually starts to. I'm not sure why the website's not moving. Yeah, this isn't updating for some reason. But pace of roll, this pace of roll analyzer, there's a chart that shows how the pace is going, and it looks like their website's really slow right now. How the pace is going, and it shows you whether the pace is ahead or behind. Again, not sure why this is not coming up, and it's kind of blowing up my point. But let me see. Here's the website. Here it is. But it's not coming up, unfortunately. But this is the URL for it. Just do a CME group pace of roll and look at the S&P 500, and you'll be able to see that a graph that shows the speed with which the roll is taking place. And it's very informative as to when we can resume paying attention to the delta, that the roll is pretty much done. By the way, the June roll from March occurred a little bit early. It was pretty much done by Wednesday, 2 days ahead of the expiration. And that was very useful information to kind of get back on track with reading the market the way we normally do. So that's how we ended up with Friday. We ended up with a normal variation day. It ended up pushing to 28.9975, just a tick below the century figure, and holding steady. The profile had multiple distributions in it, had one up top and one below, and overall nothing really exciting to talk about. We had an impulse late in the day. See how it exceeded the red line, this rotation, and that sets us up. For the mid long. What's the catch with the mid long? Can anybody comment on the catch with the mid long? Unfortunately, I ask these questions and I have to answer them because I can't wait the 15-second delay. Also, I wonder how many of you watched the Trading Futures with Anthony Crudele, the first episode, the premiere episode in which I went over this particular setup. If you've seen it, pipe in. Overall, we're looking for an impulse, and we're trading the pullback on the impulse back to the mid. And it could be the mid of the impulse or the mid of the session. And in this case, it held. The blue line is the mid, this blue line. It pulled back to the mid, to the tick. The problem with this trade is that it occurred right at the close, which by at least my rules isn't a valid time to initiate a new trade. It just isn't a good time to be trading unless you're scalping. So we carry that into the overnight session. The overnight session, given the way we closed relatively strong. We closed above the morning range, above the prior day's close, and but in range of Thursday, and we drifted up to 29.0475 before just walking back. There's not much that I see on the news that's driving this. The mid for the session remained around 2,900, and you can see the mid was tested there, and there. We have a local triple top at the mid at 2,900. You want to pay attention to that century figure area when we open. As far as the inventory, most of the overnight inventory was long. It's rebalanced, however. It's come back to the close, so the inventory is balanced. The delta is negative, but again, delta is tricky this time because of expiration. So that's where we stand overall. We are looking at, let's see, what are we looking at for the session? What are our plans for the session? So in the scenario segment, we're going to look at what is likely to take place this morning. The overall expectation is an open auction that is in range of Friday. We are completely balanced. The big MC point of control is at 28.84, which is just below Friday's low. My expectation is it's likely to make an attempt higher and then push lower. I'm expecting it to rotate down to 28.84 and get stuck in this confluence zone down here. Might poke through to 77, but overall, do not expect too much. This is actually already quite a bit of range that I'm drawing on here, about 14 points to the downside. That may be a little optimistic, but overall, I'm expecting it to test up and fail down as the primary play of the day. And now our job is not to make that happen, because we can't. We just follow what the market does. Our job is actually to look for clues for that happening, and then to position ourselves, start to stock shorts. And when we stock shorts, we'll look for the point of control Friday, aiming for 28.84 as the primary target for the short. Secondary is that we're likely to continue lower, push down into the point of control, consolidate, and come back up, and then squeeze through this 2,900 area and start moving back towards the 29.10, but likely to get stuck in this 29.04, given that the range to the upside is likely to be compressed. So that's quite a bit of range from about 28.88 which is the point of control, to 2804 is quite a bit of range. It's a little optimistic as well. So I'm not expecting, the bottom line is Monday on expiration, generally very poor in terms of opportunities and range. Just today, it's your day to be very, very picky on the trades that you take. Predefine your areas, take them when they come, and let the market do what it does. A quick look at the CT Bookmap. They haven't been persistent throughout the session, and so I wouldn't put too much stock in them. Again, it's another reason why I think that we're likely to have a pretty quiet session today. Again, barring any news. News changes things. Okay, so be smart and take your time today, and really, if you have something to work on in terms of trading, but it doesn't involve you trading, this is probably a good day to do that. Good luck today, and I'll catch you tomorrow morning. Take care.